Initializing live stream. All right, good morning, pre-market traders, you early risers out there. This is Kyle Bazzi here at Benzinga.com. I am now filling in for Joe Elconin today, a little bit of switch from last week, and I am very happy that my main man, Dennis Dick, is back. Dennis, I know you're still in Denver. Thanks for waking up early. Good morning.
What's going on, Kyle? Yeah, it's 6 o'clock out here in the mountains. I'm actually coming back to Detroit area here this afternoon, but figured I'd come in here, do the show with you guys this morning, bright and early.
We got a great show lined up for you today, guys. A ton to talk about, including some movers from over the weekend and earnings last week, some new plays this week, and even a little bit of Ukraine talk. Also want to bring in our editor and producer, Mr. Joe Young. Mighty Joe Young, good morning.
Well, thank you very much, Joel. I'm so used to Joel being the one who's on the show in the morning. I'm sorry, Kyle.
It's all right.
That's a little bit of an insult.
If you could see my face, then I'd be insulted. But
okay,
Joel,
yeah,
none of that. We're good then.
It's just I was in the mode, and yeah, but it's great to be here. It's a chilly Monday here in Michigan. We got some more snow over the weekend. And Kyle, did you watch the Oscars last night?
You know, I caught a little bit of it. I didn't have too much time though. I'm headed to New York tomorrow, so I had to get packing. But I did see a little bit of it.
Yep, yeah, me too.
Alan brought Twitter down. Did you see that?
Yes, I saw that.
She takes the pick, 1 million retweets. I was actually on Twitter just playing around. I was like, it's not working. I'm like, what's going on? It's not working. And then I figured it out. It's Alan. Alan brought it down with that retweet picture. That's crazy, man. Over 1 million retweets. Everybody's trying to see that picture. Refresh. And Twitter crashed there for like 2-3 minutes.
That's unbelievable. Unbelievable. I mean, just running the sites here to think about 1 million retweets, how much the load that is just on your servers is incredible. All right, cool. Well, let's before we get into the top of the lineup, our futures, gold, and crude tickers that we're going to take a look at the futures this morning. Dennis wanted to bring up a little bit of what's going on over Ukraine from a macro perspective of our markets. Brent from our news desk, give us an update.
All right, so the Ukraine, not the Ukraine. Ukraine is really what the market's kind of looking at today. Late last week, Vladimir Putin received parliamentary approval to send troops into Ukraine as pro-Russian forces were taking control of that Crimea region, which has been just a pot of tumult lately. And then what's really kind of driving the market today, U.S. and Euro officials both are sort of considering sanctions on Russia here. It's causing a lot of concern related to economic growth, plain and simple.
And we've got the Russian ETF. If you bring that one up, Kyle, it's symbol RSX. It's trading down $2 right now here, down over 8%. There's major concerns, obviously, and this is starting to spread into our markets too. S&P futures as well have been down as low as 1835.75 here overnight. So we've lost as much as 20 points. We have bounced back off of those lows, trade at 1843 right now, but it's kind of a mess here across the board this morning.
All right, Russian ETF is RSX, you said? The market vectors.
Roger Sam X-ray.
Wow.
And you've got that thing as a mess here this morning too. It started selling off here last week, like just looking quick technicals on it here. Got up to 2640, struggling. We've been selling off here basically the last week and a half on these concerns. Today seems to be a major washout here. Obviously falling, we fell $2 over the last week and a half. We're falling $2 here this morning. So kind of the washout here, obviously on the news that there is obviously troops over there now, and we're looking at potential some major concerns here over there. Gold here, obviously. Let's move to gold here too, Kyle, because gold is really popping. I think what you're going to see today, obviously you're seeing this morning, is risk off. We've been on this risk on. Everybody's kind of been jumping back in the markets. S&P futures making new highs again last week. Everybody wants back in. All of a sudden, it's like, whoa, hold on here. And we're moving into some defensive issues, and gold is really the beneficiary here this morning. Gold is popping $23 this morning.
Wow. Well, Dennis, we saw last week too, and we had one of our guests on early on in the week, that we had seen bonds, gold, and the S&P all moving higher in sync, which we needed to see a divergence. But obviously with this news, gold's going to benefit a little bit. So, what are you seeing as a key level here with gold?
Well, looking here, we obviously were trading this 1340 area we had been struggling with last week. Got up just under that. We are taking that out here this morning, so it is a little bit of a breakout here. We're trading 1345 on the March futures right now, which puts it up $23. If you look at the trend here, the trend has been very well all year for gold, really. In the last month, we've broken out from that whole 1240 to 1270 area where we had struggled. We went on the tear where we were saying, everything seems to be correlated all of a sudden, because usually when the S&P futures are going up, gold's going down. That hasn't been the case. Gold has been going up with everything else as well. And now all of a sudden you're seeing concerns here, and gold's still going up. So people, have been underinvested in gold here for a long time. And when the herd gets rolling in one direction, now everybody's saying, oh, well, maybe we do need some gold. Everybody's popping in. All of a sudden, concerns over here, Ukraine, Russia, risk off is coming on, and people are saying, well, get me in gold. Gold is safe. And that's what they're doing here this morning. And this is a breakout. This is a classic breakout here again on the chart here on gold. And I still think you got to be a buyer pullbacks.
Solid play right there in gold. I really like the RSX Russian ETF. That's a solid trading idea for everything that's going on over there. I got Morgan in the chat saying, let's get to oil and energy. He has it in mind what discounts look good. So let's pull up crude real quick here on the chart. Dennis, what are your thoughts on crude?
Breaking out here today on crude as well. We're up $2.33, trading 104.93 on the April futures here. This is a new high here for crude. We've got to go back to the charts quite a ways here to find any levels here. Going back, this is a 52-week high, I believe, actually, on the crude. Just looking here. We have been up here before, but we are breaking out from last week's highs, which is about 103. Obviously, Ukraine, Russia, a lot of the crude comes from that area. So if there's concerns over there, inventory risks, then that's going to drive crude higher. And that is what is happening here this morning. So you are seeing a rally here significantly in crude.
All right. So that is, well, let's go over the S&P 500 real quick because we haven't done that yet. Anything you said, obviously we hit highs last week. What are the important levels we're looking at for the futures on the E-minis?
Well, I'm looking at these 1830s here. Overnight low, 1835.75. So that's a key level here for today, just because that's been the intraday low. But we kept bouncing off this whole 1831, 1832 area. When we broke out originally, we went out, we took out 1846 where we had major resistance, went out. That breakout kind of became a fake out when we got up to 1855. Pulled back, and where we pulled back to that whole 1831, 1832 area. We broke out again last week, got back up here. Now this morning, where do we pull back to? Mid-1835 area. So 1831 to 1836, there's all kinds of support back there. That's where the dippers have been coming in. So I don't see any reason that they probably won't come in here today. We have bounced already 8 points off those lows. So I think if we get back to the mid-1830s, I think some people will want to come in. Those buy the dippers come back in again.
All right, that's top of the lineup this morning: crude, gold, and the S&P futures. As always, folks, inside the chat room, please bring your tickers to us. We'll make sure we cover them, give you some key levels to be looking at on the charts for your trades, and hopefully also pop a couple of trading ideas for you. The RSX is a solid one. The Russian ETF with the news over there.
Kyle, let's look at some of the individual stocks on gold, because that is what is really moving here this morning. If you're looking basically across the board, I'm seeing weakness in everything because the S&P futures are down 14. But the gold stocks are popping up big time here this morning.
What do you got
Obviously,
on the gold stocks
because gold is up $23. Let's start with Barrick Gold, ABX, one of the big guns. It's trading over $21 here again this morning. Broke down a bit last week. We started seeing that divergence we talked. I think you guys were talking about it. I was listening to the show on Thursday and Friday where the S&P futures were climbing and gold was actually pulling back, which is typically what happens. Now we're seeing the reverse with the S&P futures falling, all the gold's flying up here, and Barrick is basically getting back all of its losses from last week, trading at 21.06 here this morning. Last week we got up to 21.45. I think they'll probably line up there. That's basically the high from going back in my charts. 21.45 is the high pretty much from the last year. We did break down in April of last year. We went from cascaded down from 30 to 20 in about 2 weeks, but we are pulling back up here. 21.45 was the high last week, and I think you might run into some resistance there on Barrick.
ABX, any other off the top of the mind there for gold? Any gold?
Yeah, let's look at Gold Corp here, symbol double G, which is GG. That stock has had major resistance up here in the $28 area. We are actually going to open into that resistance here this morning. 27.76 is where it's trading at, which puts it up about 80 cents. But if you look in the last 2 weeks, Barrick Gold's been up to 28.13. It's been up to 27.97, 27.96, 27.85. So 1, 2, 3, 4. I'm looking at 5 highs basically within 20 cents of each other. And where are we opening this morning? Right into that resistance here. So I think 28 bucks, it could struggle there off the hop.
So when you say opening up into the resistance, as a trader, what are you expecting or looking for to make a play off of that ticker?
Well, a lot of times what can happen is if the stock's obviously breaking out through resistance, but when it opens up significantly, and when you're looking at Gold Corp here, looking at like it's going to open up about 3% here this morning, which is a significant move, even with futures up $23. When you open up into resistance, anybody that was basically caught long last week might be saying, oh, well, this is the second chance, or this is a third chance, or in the case of Gold Corp, this is a fifth or a sixth chance to get out here. If it breaks out and gets above that 28.13 level, which is the 52-week high, then it's a little bit concerning. But when a stock opens up at 28, you want to watch that opening action, Kyle, is really what you want to watch. And I'm not talking about the pre-market action because most of your participants, 99% of your participants, aren't trading in the pre-market. The big institutions, the big guns come in at the open at 9:30. So what you want to see is if you're looking, from a bearish perspective on this, where you think it might open to resistance, you want to see it open up there and start to pull back right away. But if it starts to open up at like 27.90 and starts to run, then obviously some people could get concerned that maybe this is going to break out here today. So you have that potential to break out, but usually you're not really getting a running start at it. And a 3% move is pretty huge on Gold Corp. So I'm actually looking for it to probably find resistance there, so you could possibly try a short or maybe lighten up on a long there. Above 28.13 though, then all bets are off.
So Morgan brings a good question into the chat, and he says fade the rally in precious metals. And what do you think about that?
I wouldn't overall. Short term here, maybe, because last week we were starting to show some weakness here. Now you're getting this bounce on this Ukraine-Russian news. But long term, the trend is still your friend here in gold. And actually, and I'm speaking long term in the last 2-3 months, not in the last 2-3 years, because in the last 2-3 years, the trend is definitely still down in the precious metals. But the last 2-3 months, gold has just been popping. Like we were saying, it was popping with the S&P futures. Everybody's been underweight gold. And this has kind of been the year where they're kind of rotating into stuff that they weren't that they weren't in last year. And gold has been the recipient here. So I still think, if you're just looking from a swing trade perspective, the trade might still be, to be buying pullbacks in gold and possibly in some of these miners. But short term here on this Gold Corp chart, I'm thinking major resistance 28, and I definitely don't think I would be buying this open.
All right, folks, we do have a special guest here at 8:35 a.m. Before we get to some more tickers, Alan Brochstein, what I consider the cannabis financial analyst in one of the absolute emerging sectors. We're going to be talking to him coming up here at 8:35 a.m. Eastern Time. Dennis, let's get into some other tickers, and let's start with obviously earnings. New Skin Enterprise, NUS, reporting earnings today of 202 versus street estimates of 199. That's on revenues of 1.06 billion versus street estimates of 1.07. I think she's moving today, Dennis. What is she doing?
Yeah, actually, it was moving down big time here just a little while ago. It's bouncing back a little bit here in New Skin this morning, but the guidance. So the earnings were okay. The guidance bad though. Q1 guidance are looking 90 to 94 versus analyst estimates of $1.20. Also, the revenue is going to be light, 650 to 670 million versus 732 million here, and that's what's really shaving the stock here this morning. If we're looking, it actually was trading quite a bit lower here just this morning. I believe it got down. I'm trying to find the lows here. I'm a little bit with not having all my stuff here. Can you bring up the NUS chart there?
Yep.
My system's a little bit slow.
And
anyways, we were trading lower here this morning, but we are bouncing back a little bit here on the New Skin.
I see a low at 73.52 this morning.
There you go.
Huge
I'm
bounce,
in Denver
actually.
here, so I'm missing some of my filters, and I usually have all the highs and the lows logged. I will have those for you tomorrow, but I don't have them logged here this morning. So it's been down as low as 73.15. Is that what you're seeing, Brad?
I see a print at 73.52 actually.
That's incredible.
That's
so we have
huge
bounced back here
decline
a
in
lot
balance.
since those lows were made and the lowering of the guidance here. The stock has basically been consolidating here ever since it had the huge sell-off there when they had the concerns, obviously, that when we sold off from $130 down to 67 bucks. We've consolidated here nicely for the last 4 or 5 days. Technically speaking, you're looking, it almost looked like a cup and handle forming, but you never want to trade something technically when earnings are scheduled because we know technicals take a backseat when fundamentals come out. But it is a good sign that this thing obviously has bounced $6 off of the low here now. We're still trading $3.50 down. So if you're coming in this morning, you're saying, oh, this is down $4, it's a mess. Well, it's a real mess about an hour ago when it's down 73 bucks. 79, not as bad. I'd love to see this thing get back above 80 because that's the level that the bulls were defending. If you subscribe to the theory, old resistance becomes new support or old support becomes new resistance, then 80 might give you some struggle. So that is the key swing number here. If we can get back above $80, maybe they shrug off this guidance, but that might be the level where we start to struggle here at. We'll see here in the pre-market.
Yeah, Dennis, this is a supplement, nutritional supplement kind of company. So it looks like shares of Herbalife are also moving on this report. HLF, let's take a quick look at that.
Sympathy play.
Yeah, HLF often does move with new skin here, and HLF is trading down about $1.50 right now, 64.92. Just looking at the charts here, this stock here has been looking like it's been ready to break down for a while, actually. We've been consolidating just around $66 here for the last 3, 4, 5 days. A lot of lows in the same area here, which is concerning that we're trading below that right now. If you look, February 21st, 66.14. February 24th, 66 and a quarter, 66.76, 66.01, 66.51 for a pretty volatile stock to have 4 or 5 lows in the last 7 days in the same area, which in the lower 66s. And now the breakdown, that's concerning. Below 65, there's a lot of air. So we are trading at 64.92 right now. They're going to probably try to defend the $65 area. If new skin rallies, obviously it's going to be good for Herbalife. It's going to be your leader today. If you're trading HLF, do not take new skin off your screen because it will be your leader. But that's the level that HLF needs to hold for the bulls to try to have a case here for HLF. Otherwise, this thing could be in trouble.
All right, moving on to some more plays in Stratasys instead. Ticker symbol SSYS reported earnings this morning of 50 cents versus an EPS estimate on the street of 49 cents. That's a 2% beat. We're also looking at 155.1 million in revenues versus the street estimate of 151.03. So also a beat on the top line. Dennis, what are we looking? I keep wanting to say Joel, but that's just a habit from last week.
Kyle, don't forget the guidance there. It is, if you're reading from the pro, it's just below that. They had some fiscal year guidance also.
What was the guidance?
Fiscal year 14, they're expecting EPS in the range of 215 to 225 on sales of 660 to 680 million. The street is at 223 and sales of 670 million. So that guidance looks like it's at the lower end of street estimates.
What do you got for the low here on SSYS? You got that, Brent?
Brent, you got the low on SSYS?
I have, wow, another huge bounce. Looks like 120.34 is the low print I see.
So we bounced off the whole 120. Here's another one that they've been wanting to buy. Every time this thing pulls back, the buyers come in. If you think the buy the dippers, have been coming out in the overall market. They've really been coming out in SSYS because SSYS lowered guidance there. Remember about 2 months ago, the stock gapped down significantly. Then you had the triple D debacle and it was gapping down in sympathy. Well, every time they've bought it right back up. And we've actually aren't even that far off of the 52-week highs on SSYS, which are up there at 138.10. So here's a stock that has shrugged off bad news multiple times before. News not great today here. I wonder if they're going to come in and shrug it off again, though.
So, I mean, at the open, if you're looking to see if it shrugged off to make a play to the long, what do you want to see? You want to see some solid volume ripping through what level?
Well, I want to see it hold the 120 because that was the low that was the low. I'm going back to the charts here from February the 14th. Obviously, the low on February 14th, 120.11. Overnight low here this morning was in the 120 area, so that gives 120 a lot of relevance here. We're $4 off of that. So if I'm a bottom picker, I'm thinking, well, maybe 120. If I'm short the stock, I'm thinking, well, maybe 120. So obviously 120 has some big relevance here. Now we always say price has memory. So we have consolidated between 125 and 130 for 1, 2, 3, 4, 5, 6, 7, 8 days, basically. We had a little breakout there on Friday, but looking overall, we've basically been consolidating here, waiting for this earnings report. Earnings come out, not that great. If the stock gets back up in the 128, 129 area, probably the people that were banking on this thing having a decent report are probably going to be happy to lighten up and scratch the trade because the report wasn't that great. So I'm actually looking at the whole 129 area to probably be resistance here again. If we do continue to pull back, test those lows, 120 needs to hold. But like I said, they have been coming in and buying the stock on bad news. So I don't think this is going to be one that just flushes out and trades down to like 115 or 110 here today.
Solid. That's some great technical analysis, and I think that's what we've all learned is you get your plays, and to get the confirmation of the levels we're looking at is fantastic. So Colt and Morgan, I see you guys have some tickers in there. I'll make sure we cover those before we get to our 8:35 interview. Up next though is Jinko Solar. JKS reported earnings this morning, EPS of 96 cents off an estimate of That's a quarter beat. Estimate was 71 cents. That's 35% beat to the upside. And then that was on revenues of 361.4 million. Revenues estimate was 346.66. A beat on the top, a huge beat on the bottom. Dennis, what are we looking at JKS on the charts?
Well, they were leaning the right way on this one because on Friday they came in buying the stock ahead of the earnings. The stock had a great day. It pumped $2 basically on Friday, closing at near the highs. The high was 32.80 on Friday. It's obviously traded and closed at 32.72. It's trading up here this morning at $33 again. Like I said, I don't have the filters logging the highs. Brent, do you have the range here on JKS?
Let me check here. Sure do. I bet I do.
It's always good to have the pre-market range because what levels get tested in the pre-market sometimes get tested again in the regular session. That's why here on the pre-market prep show, we always want to give you the pre-market high or the low depending on which stock, the way the stock is trading.
I see a high at 33.03, and then it looks like on my chart, the number didn't print at the bottom, but it looked to be around, let's see, 31.20 or so.
One concern here is that this report looks pretty solid on paper, and they're not really buying the stock that much. When something reports and blows the numbers away like it looks like here, you want to see the stock pop in $1, $2, $3. Well, we had our big move already on Friday, so a lot of people were already leaning long on this thing. So I'm wondering if the herd's leaning a little bit too much on the long side here. Want to see this thing? It's got to hold the low of 32.72 or the high from or the closing price from Friday, 32.72. We start trading below there. There's a lot of air below, and this thing could cascade through the 32 handle because there's nothing in there. Above 33, we were technically still in breakout mode here. If we're going back to levels, we really got to go back to January 23rd, which was a high of 34.50. I don't think that's going to come into play here today. So you kind of got a lot of air above and you got a lot of air below. Sometimes it's best to just sit on your hands on some of these things. I know everybody likes to trade everything and trade the earnings here, but here's a situation where there's a lot of air above, a lot of air below. So I think I might just sit back and watch what happens with this one.
I'm tracking the call on this one. Just recently, the CEO saying that the company will explore strategic alternatives for its project division. And kind of to your point, Dennis, that seems like it would be something which would get the stock moving a little bit higher. Not seeing that right here.
And that's concerning. So we need to hold, like I said, the 32.72 level.
32.72 for JKS. Make sure you guys write that down. Keep bringing your tickers in. I'm writing them down, so even if I don't say something in the chat, folks. All right, next up is
Kyle.
Yeah.
Let's just go back just for a second here because we were talking SSYS and Triple D and XONE are pure sympathy plays with that stock. And we've got some news on Triple D here this morning as well. Needham is lifting their target and their estimates for Triple D, but it doesn't matter because SSYS is traded down with the report that wasn't that great. And that is knocking Triple D down here this morning. And this stock has been a wild child here. Obviously, since they lowered the guidance and had the disappointing earnings report back about 2.5 weeks ago, this thing has pretty much been straight up. So we had the washout day back at $56 and just climbing the wall of worry, kept climbing. We've consolidated here nicely for the last 4 or 5 days, had lows of 73.38, 73.78. 73.83, 74.24. So I'll call that whole area $74. So between 73.50 and 74, we made 5 lows in the last 5 days. We're trading down here this morning. Where are we trading to? Well, we've got as low as $74. So it looks like the bulls, that's where the buy the dippers keep coming back in here in Triple D. And if you're playing the dip and if you're watching SSYS and if it starts to bounce, maybe you get a chance to buy Triple D again in the 73.
Hey, and Dennis, you said Needham boosted their price target. It looked like they were not the only one. Had raised price target at Piper Jaffray. They raised the price target to $82. Also at BB&T Capital, they raised the price target on Triple D to $95. So getting a lot of analyst interest in 3D Systems this morning.
All right. Well, that's DDD. Was there another one you wanted to pull up, Dennis?
Yeah, let's bring up XONE and talk about that one as well. The stock's pulling back $1.50 here this morning on the SSYS report. But here's another one that's found a nice home here in the whole $45 area. And that's where we're trading to. So like we were saying on the other one, stocks open up into resistance. Here's a stock that is opening into support here again. $45 has been defended here. 1, 2, 3, 4. Basically the last 3 or 4 days. I know we took it out and got as low as 44.15. But these stocks trade pretty volatile. They often have 2-3 point ranges. So when I'm seeing 2-3 lows in within 50 cents, 75 cents, that level has got some significance, obviously. So I'm looking here, and here's another example of where a stock might open up into some support. The 44 handle has been defended on XONE the last 3 or 4 days. I think they defended again today.
All right. Well, next up is DRI, Darden Restaurants. Oh, that's not DO. Pulling up the wrong chart for you guys. We're seeing they had earnings this morning. Reports Q3 prelim comps at Longhorn up 0.3%. Says Olive Garden is down 5.4%, and the EPS reduced 7 cents a share from more than a year ago due to weather and direct costs. What are we seeing in DRI this morning, Dennis?
Darden citing the weather.
Pulling back here a little bit, very, very, very light volume. So when you're only seeing about 1,000 shares traded here since the earnings report, or 1,500 shares traded, it's hard to put a lot of relevance into this report or into the actual pre-market trading. We obviously were leaning the wrong way here on Darden because on Friday they were buying it. Stock rallied, closed near the highs, got up to 51.12, closed at 51.06. So a lot of the longs that were banking on Darden having a good quarter are disappointed here this morning. So you want to watch for an opening washout of those guys. The 2 lows that we set, 49.58 and 49.64, are close to each other there from the last 2 days. So that number has relevance, obviously, as well. If this thing starts cascading down through handles, which I don't know if it's going to fall another, it's already down $2 here in the pre-market. I think that might be a little bit overdone. $48 has been absolutely enormous, but I do not think that's going to come into play today. If it did, though, that would be a level that would definitely, I definitely think you could get a bounce from. But the initial levels that I'm looking at is whole 49.5 area. We need to get back up above there and try to hold that level. And remember, this is a kind of a defensive play a little bit here too. I've got the S&P futures trading down 15. Now this is on earnings, so it's going to be trading off of earnings. But the buy the dippers sometimes like to come in on these yield plays. This thing yields 4.3%. So there's a yield play here too, where usually these kind of stocks that yield this high don't come in and knock $3-4 off the stock. So when it's trading down 2, this is a big move for DRI.
And Dennis, is there volumes on this move down?
No, it's very light, and that's why I'm saying I've seen 100 shares 49.74, 49.73, 200 shares is traded 49.10. It's bid 49.20 here, so it looks to me like they're probably going to defend the 49 area a little bit here this morning. Very light volume, so you can't really put a lot of relevance into the pre-market trading here.
See, that's so important is when you're watching this pre-market trading, it's something that you taught me was if there's no volume, especially in the pre-market, that this thing could rip right back up at the open pretty easily without that. I mean, with no volume into this move, right?
It can. It has the potential to do that. I don't think it'll rip back up, but I don't think it's going to continue to cascade down here either. Here's the market. We're offered 100 shares, 49.20, 49.70. Usually a stock like this reports, and it doesn't usually have much of a pre-market. You gotta kind of wait till 9:30 to really get a feel for the action. When you get a stock like DDD reporting, when you get a stock like Facebook reporting, it's going to get priced very quickly in the after hours because there's so many participants trading that earnings report. Mm-hmm. There's just nobody trading this earnings report yet. So we really don't have enough information to really gather, where this thing is exactly going to go to or where we think this is going to bounce. All we can look at is the Friday and the Thursday trade and say, oh, well, bounced 49.50 area, really bounced off there. Nice. If it opens above that area, maybe the bulls come in or the institutions come in, maybe defend that area again. So we got to wait kind of till 9:30 when the real trading starts in this thing. But the first initial level, the key level that I'm looking at is 49.5. I know we're trading below there right now. If we can hold 49.5, the bulls have a case, but the report wasn't that great here. So I'd be concerned if we started trading below 49.5 in the regular session because there's not that much below.
All right, up next is our darling that seems to come up almost every other day with great news. JP Morgan boosts target on none other than Tesla, TSLA, from 137 on a price target to 164, but maintains its neutral. Are we getting a move here from the upgrade or the upgraded price target anyway from JPM on Tesla?
No, because here's the deal, Kyle. JP Morgan boosted target from 137 to 164. The stock's trading $244. So it's not even relevant. Where they're putting the number, it isn't even close to where it's at. So this actually looks to me like they're not boosting it much. They're not really buying into the run the Teslas had. So that really isn't good news here. This isn't an upgrade. This is just a price target boost. They're raising it a little bit here, but if they were really bullish the stock here, they would raise the target a lot more than that. So that's telling me that they're looking at this saying, oh, we're not really that interested in buying it up here at $244. And I think the market's interpreting it that way because they are knocking the stock down $8 here this morning. Now, with SPOO's down 16, the bait on this thing is huge. We know this thing moves with the market. When risk on, risk off starts coming in, they take the money out of stuff like this. And they are taking the money out of Tesla here big time this morning, trading down $8.
All right,
Friday's low, 242.55. So we are trading 236.90. If we start rallying up, that low could become some resistance too. So I'm looking at basically that low from Friday as giving you some possible resistance in the 242 area if for whatever reason we get a little bit of a dead cat bounce here. But there's a lot of air below. This thing's been on a hell of a run here, and it's a little bit scary to be buying it, when it's only pulling back $7.
2 points here. What was the low on Friday again?
Low on Friday, 242.55.
245.55.
242. Call it 242. It's hard to really worry about 50 cents, 70 cents on a $200 stock that moves 5, 7, 10 points a day. But call the whole area $242.
Okay, cool. That's our possible resistance that we see Tesla run back up.
If it runs back up, but I don't know if I see that happen, and this could be one, where they come in nervous here. But 242, if it starts to run back up, that's where you might run into some resistance. We're always trying to set up scenario analysis for you here on the show. We can't really, we're not going to tell you exactly, we'll tell you what we think, but it's all about scenario analysis, and that's what trading is all about. It's all about being prepared for when the price moves to a critical point, so you're ready to take action. So we're always trying to give you levels where you may want to take action if the stock gets to that price. That's the key with basically trading, is always being prepared for when the stock gets to your level to be ready to take action.
Gentlemen, real quick before we get to Alan here, a bit of volatility in the S&P 500 futures. We did just have personal income and personal spending for January out. They were a little better than expected, and personal income was at 0.3%. and personal spending was up 0.4%. The street was looking for estimates there of 0.2% on the income and 0.1% growth on the spending. So a little better than expected. S&P futures kind of ticking all over, ticked down at last check. And then one more quick data point. We did just get Chrysler retail sales for the month of February, I believe it was. Let me pull that up. They reported 11% growth for the month of February in U.S. auto sales. We will be getting results out of both Ford and GM, so stay tuned for those.
Let's take a look at those Ford and GM charts, Kyle.
Let's do it. Ford is my favorite.
Let's look at Ford here first. Ford is pulling back here with the overall market this morning. We're trading down at 15.19 right now, went out at 15.39, so we're down about 20 cents here. But here's a chart that this stock has found major support here in the lower 15s, 1, 2, 3, 4, 5 days or so, between 15.07, 15.16. We're pulling back here this morning, but we're pulling back right into support. Always like those setups when we can pull back and open into support and defend it. As long as the stock stays above $15, it doesn't look that bad. GM chart actually looking here just similar here on the GM. This stock has actually really been defended. Holy cow, this level is really big. $36 has been absolutely enormous for this stock.
Look at that.
The low,
One, two, three, 4 bounces off of it.
Yeah, and you know what they often do? They often go through the big hole number because they know when they take it out, the big hole number. A lot of retail traders, and even looking at 36, that might have been taking out options expiring there from Friday. So they often do take the level out by 5 cents, 10 cents. I always look at the big whole numbers. I always say stocks bounce in the 90s and sell off and sell off in the teens because they like to go through the whole numbers. So basically what that means is if you're looking at a big level of 36, a lot of times they like to take it just slightly through there so they know they can trigger some stops if they take it out through 35.90 and then bounce it. This is what they've done
Joe,
here multiple
Joe, how do I pause the
occasions.
show?
They got down to 35.94 3 days ago, got down to 35.89 on Friday, 35.97 on Thursday. So you're looking three lows within a dime of each other. Where are we right now? We're right there right now. Below 35, I'd say 85, which is about where we're trading on the lows here in the pre-market. Then it gets concerning because there's a lot of air below here. So this whole 35.90 to 36 area is major for the stock. I'm interested to see where it opens here. Starts cascading down through 35.75. Then you've got a breakdown through a key level. So keep in mind, this is going to make a big move here today. It's either going to be defended again here in the whole 35.85 to 35.90 area, or it's going to start to break down. And if it starts to break down, there's not much until you get down to 35.25, which was low on the 14th. So you got two potentials that can happen here. I think if we start trading down to 35.75 and the market starts to sell off as well, there's a lot of air below here. If the market starts to continue to defend this level, and obviously S&P futures are going to dictate all of the action here in all of these stocks here today. If the S&P futures do start to find a bounce, then this stock might bounce here again in the same area that's bounced 1, 2, 3, 4, 5, 6 days in a row.
All right, cool. Well, we're going to take a quick break before we bring Alan on here, folks. And when we get back, also, we'll be discussing some of the tickers that you put into the chat. Look at the levels. Find the scenario analysis so you guys can be ready for the day. Hopefully make some money. We'll be right back in about 30 seconds with our first guest, Alan Brochstein. All right, welcome back, pre-market traders. I want to welcome our first guest of the morning, Alan Brochstein, from, or what I call the cannabis analyst. He's with us today on his birthday. Happy birthday, Alan.
Hey, thank you, Kyle.
Now,
Happy birthday, Alan.
Now, as we know, you were just saying that why are you guys talking about gold when it's the green gold we should be talking about. Alan, today I want to take, and we got a lot of people in the chat that we're going to be talking about, the tickers, and I follow your letters really carefully over at 420investor.com. Talk to us a little bit before we get started. I know a big CNBC show came out last week on the cannabis industry, and there's a lot going on in that market. Can you set up for us what the market is like before we get into some specific tickers right now?
Sure. So last year you had a bunch of early adopters and they got ahead of the curve a little bit. I mean, it was very exciting after 2012. You had Washington and Colorado approved, but there was still a lot of uncertainty. A lot of the early companies weren't exactly the best companies. So this year it's totally different. We rocketed up in January 3rd or whatever the first day of the month was. And it has been no looking back since. I just looked at the February performance, and there's been no pullback. We just keep moving higher. And I noticed during February, I think there's 37 stocks that I took a look at in this Seeking Alpha article I just published. And I think maybe 13 of them were down. So it's not like every stock is going up every day, but the market's a lot smarter than it was a year ago. People are learning to distinguish between what's real and what's not real. And maybe the valuations are high, but we're getting better companies, a lot more interest, and people are really excited.
Great. Now let's, Dennis. The question I always have when I'm looking at these stocks, and folks, you got to realize that a lot of the stocks that are in this industry, like Alan just said, if they are penny stocks or OTCs, there's always a risk that comes with that. Alan, what do you see with that when you're looking at some plays or perhaps making a play inside your portfolio on your product 420 investor? What kind of concerns come in when you're looking at penny stocks?
Yeah, that's a great question because it is kind of unfortunate that most of the stocks in the sector, there's probably 3 that we're tracking that are out that are not penny stocks. So I don't know.
What
Some
are
people say
those
there's
3? What
the
are
3.
those
Well,
3?
we've talked about them before. I'll add a new name today, but the ones we've talked about before are GW Pharma,
Yep.
and we talked about FULL, which is Full Circle Capital, last time
Yep.
I was on the show. And then there's a biotech IPO, and I considered it kind of marginal, but now I'm actually considering a little bit more. It's called Cara Therapeutics, symbol CARA. It was a NASDAQ IPO in February. It's done well. We had some. This is like an awesome story for 420 Investor. I can't keep up with everything. I need to. People joke that I've cloned myself. It's not true, but I actually need to. We're working on getting some more people. There's just too much going on. But Cara was one that I did a pretty good job of getting it out there so people would at least look at it. And we have some really smart subscribers, and they went with it. And they one of our guys is an attorney, and he did some work and found out that they have a secret patent apparently. So a lot of the guys bought in on that. I mean, this is the beauty of 420 Investor. They don't need me to figure this stuff out. So
That
that's
chart on
Cara.
that CARA, that has been on a tear here. I'm just looking. It looks like it stifled about a month ago, and it was down around $10. Just I'm looking.
Yeah, the
Just
IPO
at
was at 11 in early February. It broke
yeah.
temporarily, and then all the brokers came out. I was really surprised they all had buys on it. You know how that works. But anyway, it's getting some attention. They're actually it's more related probably than I thought. Not only because they have a couple of patents on, but also, there's a big story out there, and I just saw last week. A lot of doctors and a lot of society are very concerned about overprescriptions of opioids. And so cannabis is hopefully going to be a replacement over time. I mean, right now, it's a big gray area. People that use it get a lot of relief, avoid opioid addiction and all the things that go with that. But doctors can't really prescribe it right now. The AMA doesn't have a pro cannabis position, so it's going to take some time. That's why when GW Pharma hopefully gets its medicine approved in next year, doctors are going to get more on board. The doctors they want the FDA blessing basically.
Dennis,
Is that like best in breed GWPH? Is that what you would say best in breed is here, Alan?
No doubt about it. Not in a lot of different ways, but they've been at it like we talked about since '98, public since '01. Lots of patents. They are truly. I mean, there's a couple of other guys that would like to be like them, but they're in a league of their own. But this Cara is interesting. They're the real deal also. That was one of the things that I picked up on real quick. Cara's management team, definitely high caliber. But I want to get back to what Kyle was talking about. So, because he asked a good question, what are we looking for? And I got to be careful because I came up with this term. Actually, my wife did, and I shared it. And it's kind of funny, but I don't want to get into this. But we call it passing the Inspector 420 is the term, but basically it's kind of funny. Last week, all I did was I said I had these conversations with these CEOs of these 2 companies. I'm not going to name the tickers. It's not even worth it. But they were up like 25% and 40% on Friday morning just because I told my people 15 minutes before the market open that I had very good conversations with the CEOs and I was kind of upgrading them to my watch list. I wasn't saying to buy them, wasn't saying anything about it, but just that they kind of passed the 420 investor inspection. So Inspector 420 approved. I don't think the SEC would like that term, so I'm not going to use it. But so it's just I think the real point is that there's some real companies out here. This is the Wild West. I spend a lot of my time talking to people that are a lot smarter than me when it comes to what's going on in the industry, and the real deal, definitely the real deal. And unfortunately, they're in penny stocks, and so I'm hoping that we see. There was a company MSIG. I think we talked about that last time. Symbol MCIG, and they came out with on Friday a monthly, I guess they're doing now, investor presentation. And one of their slides explained all that's necessary for them to get uplisted to the NASDAQ would be their price. You have to have a $5 price, I believe. So, and they explain all the points that you need to do. That's what people are going to be focusing on pretty soon. And I've said it several times this year. We're going to see 1 or 2 uplistings in the next year, and we're going to see some new IPOs that are going to be really exciting. One's coming out of Canada, by the way.
Well, that's and I want to kind of harp on that point just one more time, Alan. Of although it's the wild, wild west out there, and although there is a lot of opportunity, with a big upside comes a potential for a big downside, and that risk is what needs to be mitigated. So when you go about looking at stocks in this sector, how are you gauging, the lifeblood of these companies?
So, one of the big risks is just valuation in general. Even a company like GW that we can all agree, or most of us will agree, is a great company. Is it worth 1.2 billion? That's a fair question. Some of these other companies, the risks go beyond valuation. They go into, is FINRA going to come in, or SEC going to come in and shut them down? So we try to break down the universe so that people understand which stocks are riskier than others, and to on all the stock. And we have a very healthy debate. There's a lot of lightning rods in the industry. Some names where people are very galvanized. They're either pro or con, and we're lucky on our site. It's not like iHub or some of these other places where they start bashing each other. But we have some pretty spirited debates on some of these names, and my job, I feel, is to just make sure everybody knows what these risks are. There's no pun intended, high risk, definitely high risk in all these names, just because of the very nature. So we tend to focus on things like, are they SEC filers or not? That's an easy thing to determine, but you have to remember, just because they're filing with the SEC, I think Enron was also. So that's not going to save you. So we try to understand the valuation. There's a lot of people out there that are missing some very critical elements of the capital structure. They don't understand what convertible notes are, convertible preferred stock. So we try to point those things out. We try to, I talk a lot to the CEOs and sometimes some of the other people in these companies, and really try to make sure that their stories are consistent, that they make sense, that they seem to be long-term thinkers and not just trying to make a quick buck. So these are a lot of, there's a lot of behind the scenes work to kind of get comfortable. But even after doing all that, that's no guarantee, Kyle, against losses.
Alan,
And I was just going to
go
say
ahead,
that's
Dennis.
the whole thing here. You're saying you're covering 37 different companies here. How many of these are going to survive? That's the question. Because whenever you get, like, I remember the internet bubble, there's always something, and there's only a few survivors there at the end. Of those 37 companies, like, how many can really be, the guys that are going to survive here, and which ones are those? So do you want
Yeah.
to continue to focus on the best in breed? Like, do you want to focus on the Cara? Do you want to focus
Well,
on the GWPH, or do you want to take flyers on some of these OTC names?
so I've got 1,000 people asking me to do stuff, and so they all have different views. Some of them want me to, like, name the flavor of the day sub penny stock, where they can literally, quintuple their money in a day. So I try to point those out. I don't put a lot of time into them, but definitely we have some subscribers that want in on that action, and it's like the horse tracks. But just to be clear, there's probably over 100 names. I have literally about 65 or 66 names that I have that I'm tracking. That 37 number was just something, a smaller universe. I'm literally trying to keep up with 28 names. Of those 28 names, a lot of them I really don't like. So I think the way to think of it is, there's a few companies that will be really good companies, and I feel like we've identified those already. No guarantees, but the subscribers are real. They understand very clearly which ones those are and why I think. I think some of them are very clearly very bad companies, and they won't be around. And then a bunch of the rest, probably the middle 50%, we'll have to see. I mean, companies can change. They definitely can evolve. I have been very pleased that I feel like I'm very lucky. I've done a lot of work on how to properly motivate management. What's the best way to be a good leader as a management team? What are the best practices? I'm very aware of those. And a lot of these guys come to me and they say, we want to do things the right way. How should we do this? And I give that advice for free because I want it to happen. And so these are the companies that I like. When they're trying to do things the right way, I make sure that our subscribers are aware of that.
Dennis, I got a question too. So looking at even a Cara Therapeutics, as we're talking about a little more of the technicals, CARA is the ticker. With this just IPOing in most of the levels uncharted territory, how do you look at a stock like this, and how do you put importance anywhere where people are bulls or bears are making stands?
It's so hard when you've got stocks moving 100% in 2, 3 weeks. Like, I've always made my career, and I've been a prop trader for 15 years by playing defense. And it's hard to play defense on stuff like this. If you're a short-term scalper, short-term trader, you gotta look at the lows that are made the previous day. You gotta look at key levels. I mean, they do come into play. 18 was the low on Friday. Where is it trading this morning on the pullback? $18 even. These levels do come into play. You've got to also be aware of the overall trend. I mean, Alan's right. The trend on these things this year have been straight up. They came in, this thing IPOs 3 weeks ago or a month ago, and basically is doubled. So you're looking pullbacks probably still, the trend is your friend, and pullbacks are probably going to be bought on stuff like this too. Made a new high 21.22. The only concern here from Friday's action, I would say, obviously, is that it went up to 21.22. That looked, like it rallied another $3 here, and then pulled back and closed weak. That's kind of a reversal day here. So if this thing starts taking out 18 bucks, then you got to air all the way down to the previous day's low of 16. So that's the only way you can approach these things. But it is scary. Alan, you're right. There's a lot of risk in these things here. And short-term trading, sometimes, you can get hurt here in a lot of these things as
And
well.
volume,
Dennis,
volume.
I'm sorry.
No, I was just saying, whenever you're looking at, especially stocks that might not be listed on the Nasdaq or NYSE, you need to see volume going somewhere. Otherwise, you'll get trapped so quick.
Well, this thing, the volume's been picking up nicely, and so I mean, look, I'm sure back in the day when Google first came out, it had a chart like this too, and people were like, I don't want to buy. I'm not saying this is a Google, but who knows where this thing could go? It doesn't have, it's less than $1 billion market cap. I really don't know the answer, but what I've been telling people is watch that 10-day moving average. And so, so for fresh money, it's kind of dangerous to come in here at 18. The 10-day moving average is at 15. You can take a quick 3-point hit, but that's kind of, I think you got to just pick some rules and stick to them on trading situations like this one.
I do agree. Well, Alan, happy birthday, man! I appreciate you coming on for Monday. We're really looking forward to what you got going on at the 420 Investor. I mean, if anything, what you promote is, doing your research, making sure you understand the risk, especially in this. There is a opportunity in this, emerging sector. 2014 is going to be a heck of a year for it. But, making sure that your risk can justify your reward is an extremely important point. I know that you preach it, up and down all day. So thanks for coming on, buddy, and happy birthday.
Okay, thanks on both those. Talk to you guys soon. Thank you.
Thanks, Alan.
All right, Dennis, you're getting off at 9 o'clock today, right?
Yeah, I usually try to pop off at night because I usually like to get ready and trade my open as well. But we got 6 or 7 minutes
Cool.
here. Just wanted to talk just briefly here, just go over some of Alan's stuff here as well. Obviously, that you're saying there's only 2 or 3 stocks that are listed here. I tend to stay away from the OTC stuff. I'm kind of risk adverse. If you're a gambler and you want to, obviously, this is like your casino and your buzz from it. I'm all for it. You want to go trade these OTC stocks. That's great. I'm always interested kind of in the best of breed. And the GWPH chart, you just can't argue with that one so far. I mean, here it is. The stock's pulling back a little bit this morning with the overall market. But here's another stock. Every time this is pulled back, it did get a pullback 5-6 sessions ago, but they came right back in with their buying shoes again. The stock made new highs on Friday, 69.15. This is one that I am interested, just from a technical perspective, of buying on pullbacks. And I wouldn't be surprised if this thing, is one of those that actually could end up even positive today on such a big down day.
Yeah, she's trading lower in the pre-market. And you look at that monthly chart, though. Man, look at that trend.
Lying, yeah. The trend is your friend, but at the same time, you got to be aware when something's overextended too. And 3 months over $30. Now we're 65 here. So if you're playing this, you want to always have setups. You want to have risk return levels. And maybe you're saying, okay, it was a breakout there on Friday, pull back a little bit here, but I'm still bullish this thing. But this is a stock that, you can't go in there looking to scalp 20, 30 cents on. You'll get killed. You got to come in with a risk reward. Say, I'm going to try to make $10 on this thing. I'm going to risk 5, something like that. I always like the 2-to-1 risk return ratio. Like I always say to all the new traders, they could break trading, and I've been one of their educators for a long time. You could put on any trade as long as you know where your out is. Never get in a trade where you don't know where I'm going to get out, because we're all, a good trader, a guy that survived, for 10, 20 years will be right 55% of the time, and that's an excellent trader. So what do you do on those times you're wrong 45% of the time? The difference between the guy that's going to blow out his account and the guy that's going to survive is what he does when he's wrong those 45% of the time. So you always need to know where your out is. I would say below $60 on this GWPH, it doesn't look good. Above 60, the bulls are still in charge.
So what do you set if you made a trade, say in GWPH, are you going to set a hard stop, or are you kind of just monitoring it?
I never like to put physical stops out there because, like I said, those things get run. They did it in the old days. I mean, that's just what happens. When stops are on the books, they used to run the books. We always say the market likes to move towards where the paper is, towards where the book is. And when you've got a big level of $60, you kind of got to give it a little bit through it. So if you wanted me to say $60 round number, we had a low of 58.66 on the 26th. That would give you a little bit through 60. 58.66 is where I'd probably say, okay, that's it. But putting physical stops out, I never advise that. If you have to, if you got a day job, you can't watch it. I guess that's the way you've got to do it. If you're doing this semi-pro, or if you're trying to do this, on a little bit more regular basis, it's always better to watch it and know where your level is. But don't let something get out of hand, because that's how, small losses become big losses, and that's how accounts get blown out. It's like, oh, it'll come back. Whenever you're in that hope trade, you're in trouble. You do not want that to happen.
All right, we got a couple of tickers here coming in from the group. Moving on, actually moving back. Colt user asked to look at the market vector ETF for gold GDXJ. I'm going to pull that up on the chart real quick here, Dennis, and take a look at that. Maybe another play for the gold sector.
You're looking at the junior miners here.
Yeah.
Okay, just hang on. I'll bring that up here too.
That's on the.
So GDXJ, obviously we know the miners are going to be strong here today. We got gold trading up. Just give you an update here. Gold is up $27 here now. So we are flying. Yeah, this is a huge day. So we know all the miners are going to be up stronger. The junior miners probably going to be stronger here as well. This stock's found pretty decent support in the whole $41 area. Obviously, we bounced off there 1, 2, 3 days in a row here, just below 41. Now we're coming up, and we're coming up into resistance. So you got to respect that as well. Looking multiple highs here in the 44s. We're about a buck away from there right now. So I'd say if this rally does continue to get overextended here today, probably find some major resistance in the upper 43s as people probably try to lean on that 44 level.
All right, resistance in upper 43s here for GDXJ. Colt, if you're listening, that's what the number you're going to be looking at. He also wanted to look at, let's see, COP, I think it was. Let's pull that up, see what.
ConocoPhillips?
ConocoPhillips, yes.
So COP. We're pulling back about a buck here today. Stock chart has actually had pretty decent resistance. I'm just looking here. We've struggled here in the 66.80, 66.85 area. Got up to 66.88 on Friday. On Tuesday of last week, 66.80, 66.85. So resistance very well defined, which is up about 80 cents from here. Not sure, some of the oil's popping up here, so Conoco probably will show a little bit of relative strength here, just because, and not saying, when I say relative strength, I don't mean the stock's going to go up. I mean, it won't be as weak as maybe the overall market here, being down 1%. Right now, it's priced right in that area. I'll give you a pre-market. Let me go look and see if there's any imbalances or anything on Conoco. Conoco actually does have a buy imbalance right now of 31,000 shares. Very early here, I would probably suspect that that's going to get offset. I doubt that this thing's going to open higher. Right now, that buy imbalance on the NYSE would indicate that the stock is actually going to open above 66.50. I doubt that happens. It's probably going to get offset and probably open lower here. But going back to the charts here on COP, looking for support. It's sketchy. It's sketchy below, so it's a little bit tricky to bottom pick. The only level I can really give you key significant level would be Friday's low of 65.62, because then 2 days before that, you had a low of 65.33. So 65.5, you got a little bit of support here, but it's a little bit sketchy. But like I said, I wouldn't surprise me if some of these oil stocks actually aren't as weak as the overall market.
All right, and one more before you leave here, Dennis. Up at 9 a.m., we have our next guest, Rich Tullo, Director of Research at Albert Fried and Company. Going to be a really, really cool interview. Rich will be discussing Comcast, TiVo, and Netflix, in addition to streaming services and cable companies. Dennis, before you leave, we had another ticker from our crazy group in the chat room, and that is Caterpillar, CAT. Can you give us some key levels on CAT here before you get out of here?
I'll tell you, this is one that I'm kicking myself on, because I was looking at this one in my investment portfolio at the end of last year. I was like, man, this is consolidated nicely in the whole 85 area. It started to break out in December, started to get above 85, where we had major resistance, and the stock has been on a tear this year. Yeah, like we've been saying, some of the stuff that they were not interested in last year, they have been buying this year. And this is one of the stocks. The stock, every time it's pulled back this year, it's found buyers here. Now we're down 16 S&P handles. Caterpillar's beta is pretty high, so I'd suspect this thing's probably going to give back at least a buck. It's down a buck and a half in the pre-market. That might be a little bit overdone at 95.51. I always try to like play out with fair value and try to figure out, where the fair value of the thing is. But looking here just from the technicals, the charts, this whole 95.30 area has been defended here a few times. It broke out from 95 there about 2 weeks ago. If we pull back that 95 area, that's where I think you might find some support. So that's where it broke out from before, and I think you'll find some bottom pickers come in here in the low 95s.
So 95, low 95s, 95.30, key area of support for the bulls. Be looking at that for Cat today. Morgan, make sure you get those levels written down before you start trading her. Dennis, welcome back. Good to have you back. Good luck at the Open here. Hope you go make some money, even though you're in Denver, and then have some safe travels back to our area later today.
Thanks, Kyle.
All right, folks. Up next, who will be joining me is Rich Tullo from Albert and Fried Company, talking about Netflix and some streaming services. Hold on tight. We're going to get him on the phone in just a second. Be right back with you. One. All right, welcome back, traders. With me, I have a very exciting guest to talk about some stocks and an industry sector that I'm extremely passionate about and watch very closely. With me is Rich Tullo from, he's a researcher at Albert Fried and Company. Rich, good morning and happy Monday.
Hey, how are you? Thank you for having me on.
All right, let's jump right into it here, and I want to kind of get some plays of some tickers. So everyone, definitely, keep your ear here and pipe in questions for Rich into the chat as we're talking about some of these companies. Rich, can you first give me your overall view with kind of how the whole sector is playing out? I'm talking about TiVo, Comcast, Netflix. We obviously have some Comcast news of recent, and Netflix always being in our eye. Can you talk about, what's your whole view on the sector and how the companies are all playing out?
Okay, so our fundamental long-term view is that the television industry at large, right, that includes programmers and the cable companies, some people call them MSOs or MVPDs, are going to are in a point of conversion, right? So this year we're seeing content go from purely a linear type of stream supported by video on demand, and we're seeing new products, what they call next generation television, roll out onto the cable systems. One of the first of those products, obviously, coming from the cable providers is Xfinity, and Netflix, Hulu, Amazon Prime are the over-the-top, versions of those products. And so what we think is that this convergence is going to drive a lot of decisions, both on the M&A front and the strategic front, for the industry.
So when you say, I mean, obviously the convergence, you know, it's pretty clear that could happen. What kind of are you talking about Netflix getting acquired, or what are some of the strategic plays that you guys have your eye on?
Well, I mean, right now Comcast is in the process of acquiring Time Warner Cable, and we think that's a very clear deal that's being driven in part by this convergence. Both companies need to get to scale in order to compete to purchase content better, and really more importantly, amortize this great investment in new technologies across a larger base of customer accounts, right? So you're not able to do things at, let's say, 700,000 subscribers for small MSO, but at 30 million, you can roll out some pretty interesting technology to your subscribers, and I think that's in part the rationale behind the Comcast Time Warner decision.
So I read an article this morning saying, does Netflix Incorporated win or lose with the Comcast deal? What does this mean for companies like Netflix and Hulu?
Well, I mean, I think ultimately what this deal says to me is, in combination with the recent court decision, is that peering of internet streaming content is going to be an evolution, just like peering of internet text content was for the telephone companies, and we're going to see probably more arrangements like Netflix has with Comcast in terms of them having, if they want to provide a higher quality level of service to Netflix subs, then Netflix is going to have to pay for that, and they can't rely solely on Comcast to be subsidizing that service for the Netflix subscribers that they have. When roughly in any of these systems, about 2/3 of the subscribers don't subscribe to Netflix or any of the over-the-top services. So it's basically a fair allocation of costing. And the derivative play we like in this is TiVo, because most of the carriage agreements, the agreements that bring TV from a programmer like CBS onto your cable system, essentially prohibit the cable system from providing that content, video on demand basis or over the top basis, separate from the agreement that they would have with CBS, which means that if you like under the dome, Netflix can't provide that to you if on Comcast, if Comcast is delivering that to your set-top box, as it states right now. So we think the way around that is TiVo, because TiVo boxes in the Comcast system are purchased by the customer, and so the customer can do whatever they want. And we think that is perhaps a roadmap for the future. And the idea that Comcast is going from 23 million subs in markets that may not necessarily support TiVo owing to demographics, to 30 million subs with incremental add as in New York and LA and Dallas, we like that idea a lot.
So, I have these moments of clarity, I guess, when I'm thinking about trading ideas. And mine came for this industry probably a few months back. I'm sitting in an airport and listening to a few dads talk about getting rid of cable, and the one guy's talking about his bill with Comcast up at like $180 a month or whatever it is, and the other guy's, well, I got Hulu and Netflix and it's costing me $17 a month, and the only thing I really need is basic cable for my sports teams. We talk about consolidation of this industry coming to fruition. Do you see in your research and anyone in the chat, who in the chat has cable or does not have cable, and if you don't have cable, what do you use? So pipe in the chat.
Okay.
I'd love to know, see what our users are doing. But are you seeing that kind of move right now? And are the cable companies worried?
Okay, so what you're talking about, we would define as cord cutting. We do not believe in cord cutting as such. What we think is going to be the case is what we call cord splicing, where people are going to limit the number of services available that they take from the cable company. So they'll take broadband and telephone and may not take the TV service, right? Or they may take the TV service, and they may not take buy as much on video on demand when the movies come out because they have a Hulu or Amazon Prime account or Netflix account. All right, so we call that cord cutting. And then a direct relationship with TiVo is another version of cord cutting is going from having 3 or 4 set-top boxes in the home and getting charged X amount of dollars per each box, and maybe you get rid of all those set-top boxes and you have one TiVo box that streams the content to the rest of the TV sets or devices in the home. So ultimately we think that's probably where the biggest impact of the consumer making decisions around technology that's going to face the cable company is not necessarily getting rid of TV, but more in line with limiting the amount of services, because the value proposition of the linear TV account is pretty high. In order to replace everything that you get on TV with Apple TV on a digital download basis, you'd have to pay about $6,000 a year more. And on a like-for-like basis with cord cutting, really you may be saving $4 or $5 a month after everything. But ultimately, you don't wind up saving a lot because you wind up buying more over-the-top services, and to replace your sports, you have to buy an NFL Sunday ticket or MLB, and those packages are not cheap, and very often they don't offer your home games in your home market.
So Ace of Stocks inside the chat room just nailed it, and it's the same thing that I did. Downgraded my cable to basic only and use Netflix, and that's essentially what I do too. Obviously, Amazon trying to become a player in this space, but before we get to that, talking Netflix, I am a huge fan of House of Cards. It is,
Right.
I love Kevin Spacey. The show is just phenomenal. But then I read that they only signed him for a 3rd season, and they're in jeopardy of losing that. And I think they're, correct me if I'm wrong, paying between $75 and $100 million for the 3rd season. Is that correct?
I think it's probably in that range,
And
because really they got Netflix.
so how? Here's a question I have: how does Netflix? Because obviously I'm not paying specifically for House of Cards, even though it's pretty much all I watch on there. How do they gauge the level of success with that kind of spend for those shows, and is that attainable over time with the amount of subscribers they have?
Well, it's. I think we don't cover Netflix anymore. Let me be clear. I'm short the stock personally. Let me be clear. Valuation reasons. I think. But to be honest and be frank, I think when you talk about Netflix and its originals, it's really a tale of two cities. House of Cards, Orange is the New Black, are 2 forms of programming content that can play with anybody, anywhere. All right, so I think it would be successful on HBO or AMC, perhaps Netflix is actually not the best platform to maximize revenue for those programming points, but that is what it is. Netflix doesn't provide Wall Street with metrics, but we assume that House of Cards has had a very successful return on investment. We think of the 6 million subscribers added last year, roughly 2/3, half of those subscribers are added from customer retention, right? Not losing customers they normally would have lost, and adding, and then the other 3 million are pure ads. So, when you kind of look at that churn rate going from about 6% a month to about 3% a month throughout the whole year 2013, we think that's in large part driven by House of Cards, Orange is the New Black. That said, this is a company going to spend roughly $700 million in 2014 on original content, of which House of Cards, Orange is the New Black, about 25% of that, less than that, right? And so, where we see the value being destroyed is in Hemlock Grove, Turbo FAST, Mako Mermaids, all these shows that you never heard of, that you don't love. And so they got 2 tentpoles that cost them $700 million. And, you kind of contrast and compare that to AMC, which got about 4 tentpoles that cost them $150 million, right? And so, we don't think it's a very efficient model, but they do have two successful shows.
All right, and what are your final thoughts on the Comcast? I know we just touched on it. The Comcast and Netflix relationship. What would be the ideal outcome from this relationship?
Well, I mean, I think what you see is Netflix after their earnings call would kind of backtrack on a lot of the commentary they made about net neutrality, saying they were going to fight it, saying it wasn't good for the consumer, saying that they didn't need it, saying they didn't need MSO relationships to deliver high definition streaming into the home. And this deal kind of usurps a lot of that. The question that we'll find out later in the year for Netflix is, are they paying Comcast roughly $25 million incrementally for the peering, or are they receiving some cost savings elsewhere, and this is $10 to $15 million out of pocket. We'll have to wait and see on that. But ultimately, what this deal does show is that Netflix doesn't have the economies of scale as a company that a lot of Wall Street thinks it has, because now they have to spend money with Comcast in order to deliver the content at a high level of quality to a growing subscriber base. And I think Wall Street was kind of thinking that they'd be able to get her done with $3 billion a year, and that's not the case. They have to spend more money on content. They got to spend more money on the distribution of that content.
That's a great point. Economies of scale for Netflix, they're playing on a whole new ball game as they start producing or creating their own movies. So, or TV shows, I should say. And
well, they don't really create. They're
facilitators more, right?
Let me be clear. CBS doesn't create a lot of its own content. AMC doesn't create a lot of its own content, but they're buying the content from the studios, right?
Mm-hmm.
So and they're buying defined licenses from the studios. So they don't have the evergreen asset that AMC has with Walking Dead, right? So when The Walking Dead is off the air, AMC will make money off of The Walking Dead between now and the end of time. All right, on the syndication market, on video on demand market, digital download, all that. Once AMC's relationship with Sony sunsets after the third season, Sony will own House of Cards.
Mm-hmm.
All right, Netflix did not produce House of Cards. Netflix just bought the show as a person who buys trucks would lease a truck.
Mm-hmm.
Okay, they don't own the truck; they leased it.
That's a
Right,
solid
which
point.
is a different set of economics.
That's a solid point. Is the residuals are not there like you would see on.
There's
on
no
a regular-
residuals.
Yep.
There's no residuals.
So moving on from Netflix here and the Comcast, before we wrap up here, what are your thoughts on current streaming devices like Roku, Apple TV, Chromecast, and the like?
It's actually very interesting in that they're all kind of carving out little defined niches in the market, right? Apple TV in its current reiteration is largely supporting Apple devices and feeding off the Apple ecosystem, which is not a bad place to be. It's successful. Roku, I think, is a terribly good platform, and it's a great platform because it's not really a streaming device as such, right? It's a good streaming device, but it's really a marketplace for apps coming to the TV set, and I think that's a terribly interesting business. And I think the TiVo device won't be able to compete with the Roku or Google on a price basis. But where we see TiVo Romeo on a look forward basis, and we've said this publicly many times, is that it's really the TV equivalent of IMAX or Bose, where it's their retail product is a high-end service to the home for people willing to pay for that service, just as people pay for Bose stereo equipment and people pay for extra when they go to movies to see IMAX motion picture.
And then pulling up here, Apple and Google, obviously two players in the space. Apple down 0.43% here in the pre-market trading. So general outlook for 2014, obviously consolidation is on your radar. Any other main points from your research for the industry and the sector?
Okay, this has more to do with the ad agencies we cover, but we are not as bullish as our peers. And the reason why we're not as bullish as our peers is that a lot of the economic indicators have been breaking down since the fourth quarter of 2013. A lot of that's due to the weather. But we've also noticed in our work that in each year since the end of the recession, that the U.S. economy has been getting a push from essentially three sources: retail housing investment, IP, and technology investment. And what we've seen and what we've noticed the last 4 years is that big pickups in those forms of investment have pushed the economy for growth for the rest of the year. Now, this could be the weather or maybe not the weather, but if the push is not as great for the back half of the year as the front part would indicate, then we think the economy is a little bit is very much fairly valued, and then investors have to be a little bit careful chasing valuation in here. But that's not to say that there's no investment opportunities. Just that you have to be careful and look at things that are maybe longer term in nature that have a more tangible value.
All right, that is Rich Tullo, Director of Research at Albert Fried and Company. Rich, what's your Twitter handle so I can put it into the chat to have people follow you?
Oh, you know what? I'm Southside Alice, and unfortunately, I'd love to do it, but I don't have the compliance infrastructure to handle Twitter at the moment.
The man's keeping you down, Rich.
Yeah,
the man's
it's
keeping
unfortunate.
him down.
Yeah.
All right, Rich. Well, I really appreciate.
I'd love to do it, but it's just it's the man keeping me down. You know what I'm saying?
All right, Rich. We'll really appreciate you coming on the show this morning. That's Rich Tullo, Director of Research at Albert Fried and Company. Rich is always interested with us discussing Comcast, TiVo, Netflix, everything that's going on in that sector and the like. So, Rich, thanks a lot. Hope you have a great Monday here. Up next, we're going to get some headlines with Mighty Joe Young.
Well, thank you very much, Albert Fried and Company. Maybe Rich could do like a GS elevator type of thing, where he sneaks in with an assumed identity. But Rich is a good guy, always good to have him on. And reading his report on TiVo last week is what ignited his guest spot on the show today. Although one question I forgot to put in there, Kyle, to ask is Rich's thoughts on. Last year I bought a Roku device so I could stream HBO Go on the TV, and I took it home and I went to log into HBO Go and I couldn't find my cable provider on there, which is Comcast. Come to find out, when you check the blogs on the Roku sites and Comcast and HBO, Comcast doesn't support HBO Go on Roku devices. So I immediately took it back to the store and exchanged it for an Apple TV and have been very happy with that. But I really would have liked to known his thoughts on that as well. I wish I'd thought of it sooner. But
hey, Joe, real quick, I got a couple of private messages in here, guys, as before we go over the headlines. Yeah, I know Drew put the link in earlier. I can't find it, but Options House is our sponsor for the show. So that's why you get the 150 free trades by opening an account with them. And you can find that banner at the top of the page and just click that banner, or Drew will pop in the link one more time. So everyone that's asking me that, I have a few questions for it. But anyway, on to Joe. Everyone keep pumping in your tickers. We'll cover those. We'll talk about news, some technical levels, and the like. But Mighty Joe Young, what's going on in the markets?
Here we go. Warren Buffett says it's clear that railroad tank cars are carrying crude oil need to be updated because oil from certain regions has the potential to be more dangerous than previously thought. Buffett appeared on CNBC Monday after releasing his letter to Berkshire Hathaway shareholders on Saturday. Buffett owns BNSF Railroad and a manufacturer of tank cars. Buffett says the crude oil from the Bakken oil field is it Bakken or Bakken? It's probably Bakken, yeah. In North Dakota and Montana, thank you, Brent, and the Eagle Ford oil field in South Texas have proven more volatile than anticipated. That volatility may have contributed to several fiery derailments in the last year, including one in Lac Mégantic, Quebec, last summer that killed 47 people. New safety rules being drafted by federal regulators may not be. Men's Warehouse said on Monday that it had reached a non-disclosure agreement with Joseph A. Bank, setting up talks that could lead to a merger of the two menswear retailers and end a months-long merger standoff. As part of the pact, Joseph A. Bank submitted a draft of a merger agreement to Men's Warehouse. The confidentiality agreement will finally allow the two to begin sharing sensitive business information after Joseph A. Bank said last week that it was willing to entertain discussions with its unwanted rival if they could lead to a higher takeover bid. Men's Warehouse is currently offering about $1.8 billion or $63.50 a share, a level that its smaller rival has deemed too low. But it has left open the possibility of raising that bid to $65 a share. Nissan said on Monday that its U.S. February sales rose 16%, which is expected to easily top the estimated gain of less than 1% for the auto industry. Continued cold weather in the month probably kept many car shoppers away from dealers, analysts said. A poll of 34 analysts showed expectations of a 0.3% increase over February sales last year. Nissan said its best February in the U.S. market on record, selling 115,600 vehicles. Sales rose 17% for its primary Nissan brand and gained 6% for its luxury Infiniti brand. Microsoft's newly appointed CEO Satya Nadella, in an effort to reignite growth, is shuffling management, reportedly putting former political operative Mark Penn in the new role of Chief Strategy Officer. Tony Bates, who has passed over for the CEO job, is leaving the company, with Eric Rudder, the head of advanced strategy, taking over his duties, said the people who asked not to be identified because the plans haven't been announced. Tammy Reller, the executive vice president in charge of marketing, is also leaving and being replaced by Chief Marketing Officer Chris Capocella, the People said. Penn worked on Hillary Clinton's failed 2008 presidential bid. More recently, Penn, who's 60 years old, developed Microsoft's Don't Get Scroogled advertising campaign, a political-style attack on rival Google. Samsung is trying every trick in the hat to attract users to its latest offering, the Galaxy S5. One such attempt, the company has bundled loads of freebies with the device that are claimed to be worth $575,000. Nope, I read that wrong. $575. I was looking at your next piece of currency there. What is RS? Oh, thank you. Probably rubles. The Samsung Galaxy gift section has listed a slew of promo offers, long-term subscriptions, and services absolutely for free. To begin with, the Galaxy S5 owners can take advantage of the 6-month free subscription to the Wall Street Journal that could otherwise cost users a hefty $160. Those who have been avid Evernote users will be glad that Samsung has also included a 3-month subscription to Evernote's premium service that costs $15. Then there's a 12-month subscription to Bloomberg Business Week, also worth $30. It's just not about serious business, though. The company has included free in-app purchases up to $10 for Cut the Rope 2, along with bundling in 50 gigabytes of cloud storage from Box for 6 months, worth $60, and 1 terabyte Bitcasa storage for 3 months, worth $30. Galaxy S5 owners can also take advantage of LinkedIn Premium account, worth $75. The Walt Disney Company will cut funding to the Boy Scouts of America beginning in 2015 because of a policy that bans gay adult leaders in the organization. The Boy Scouts organization is disappointed by the decision, which will affect the organization's ability to serve children, Deron Smith, a Boy Scout spokesman, said in a statement on Sunday. Disney does not provide direct funding to the Boy Scouts, but it donates money to some troops in exchange for volunteer hours completed by Disney employees, Smith said. Fox affiliates in Southern California experienced a blackout on Time Warner systems for a little over an hour during the Super Bowl last month, and the company has attempted to make good with its analog customers by providing them with $5 Target gift cards. Digital subscribers received a credit for one on-demand movie. As some have said, they may have been better off not giving away anything at all. And last night, in case you missed it, were the Oscars, Academy Awards, and some notables were the telecast recorded a big 27.9 rating, 41 share in household overnights, a slight bump over the last few years, both overall and in other key viewership demographics. 12 Years a Slave, the true-life account of the kidnapping and auctioning of Solomon Northup, a New York freeman bartered as a Louisiana cotton picker, took home the Best Picture award. Steve McQueen became the first black director to make a Best Picture winner. Alfonso Cuarón, I think I said that right, became the first Mexican-born filmmaker to win Best Director for his work on Gravity, which won 7 total Oscars. Dallas Buyers Club, a story about the real-life AIDS patient Ron Woodruff, who smuggled unapproved pharmaceutical drugs into Texas when he found them effective at improving his symptoms, distributing them to fellow sufferers while facing opposition from the FDA, swept the men's side of the acting categories. Matthew McConaughey lost 50 pounds for the role, while Jared Leto was said to stay in character as a transgender woman for the duration of filming. Disney's Frozen, one of the most successful animated films of all time, with a worldwide box office gross of more than $1 billion, was named Best Animated Feature and also collected Best Song. Spike Jonze's Her, a story about a man who falls in love with his operating system, won Best Original Screenplay. And just a little tidbit of trivia here. Ellen DeGeneres' group selfie pic received over 2.5 million retweets, the most ever on Twitter. That wraps it up for today's editorial headlines. To echo Kyle's words from before, the show would not be possible without our friends at Options House. So we'll give you 150 commission-free trades just for signing up for an account through this page. There's buttons at the top and at the bottom right. Go ahead and click on through, make an account, get 150 commission-free trades just because you listen to Benzinga's pre-market prep. Somewhere around here is Brent. I hear him shuffling behind me, I think. Brent, are you there? Oh, there he is. He's knocking at the door. Oh, man. What's going on?
I actually, Brent, I just got an alert from my Options House account saying Ford reports February U.S. auto sales down.
Hurry into the spring Ford sale at JCPenney with doorbuster deals.
I see that actually. Both Ford and GM just came out. That has never happened before. Usually Ford's around 9 and usually GM's around 10. So Ford reporting a 6.1% decline in February U.S. auto sales. The analysts on Ford were looking for about a 5.3% decline, so a little larger than expected decline from Ford. GM looks like a little better than expected decline, down 0.9%, and analysts on GM were looking for a 7.7% decline in February auto sales. Let's go to the charts real quick on both Ford and GM. Kyle, let's see. Ford trading at 15.20. Didn't look like it moved too much right there. GM shares are popping on this news. 36.10 is the last trade in GM that I see right before the market opened. Looks like GM shares were trading.
Trading right around 36 level.
36 level is in play right here. Right before that figure came out, I saw GM shares trading about 35.70. So we got about 20 or 30 cent pop on those results. Whew, that was a bit of a whirlwind there.
Mouthful for you, Brent.
But nice segue, Kyle. Definitely appreciate that. So we did just open about 2 minutes ago. S&P futures trading at 1841, just ticked 2, and that is going to be down a few ticks. Let's see, S&P cash. We are down about 14 points, 1840, just under 1845 at last check. Once again, that was the cash. The futures 1842.75. We are moving just a little bit higher. I normally give a quick rundown on some of the top upgrades, so I will do that right about now. Some of the top upgrades this morning: Citigroup upgrading shares of Intuit India November Tango Uniform. Excuse me, upgraded to a buy, it looks like there. And then Joe, this one's for you. Kate Spade getting an upgrade at Citigroup this morning. Kate Spade is the former, I forget what it was.
Fifth and Pacific.
Thank you.
NYSE FNP.
That is right. So they make Juicy Couture, Kate Spade, and also Lucky Brands. A recent name change there.
Those are all my brands.
Oh yeah, I knew it. Wells Fargo upgrading shares of Kronos Worldwide this morning. They rate that stock at a market perform. Nokia shares getting an upgrade over at Canaccord Genuity. Now rate the stock with a buy. And the last notable upgrade this morning, Bank of America upgrading shares of RF Micro to buy. A couple downgrades for everyone to watch for this morning. Bank of America downgrading shares of AstraZeneca to underperform. That is the equivalent of a sell. They just slapped on AstraZeneca. Citigroup downgrading shares of Autodesk from neutral to sell. And Barclays downgrading shares of SodaStream from overweight to equal weight this morning. Do have a few notable new initiation of coverages this morning. The quiet period closing on a number of issues here this morning. Watch shares of Continental Building, that is CBPX Charlie Bravo Papa X-Ray. We have 3 buy ratings. We have outperform at Credit Suisse. We have a buy at both SunTrust and BB&T, and Deutsche Bank and Citigroup coming in on the sidelines there, initiating with a hold and neutral rating respectively.
What stock's that?
That is Charlie Bravo Papa X-Ray Continental Building. Couple of new issues here that we are watching this morning. We have Revance Therapeutics, ticker is Romeo Victor November Charlie. We have 1, 2, 3 bullish ratings initiated by BMO, Piper Jaffray, and Cowen this morning. That one's getting a little bit of action. Also watch shares of Ladder Capital, LADR is the ticker, Lima Alpha Delta Romeo, initiated with outperform ratings at both FBR and JMP, and initiated with a neutral at Citigroup. So once again, just to review, CBPX Continental Building, Ladder LADR, and Revance Therapeutics Romeo Victor November Charlie. A few issues this morning where the IPO quiet period expired, so you have a number of firms coming out and initiating coverage this morning.
Brent, can you? We have Aerotech Corporation, ARTX, Ace of
Sure.
Stocks, saying it's going to be a beast running hard. I know we saw a pop on Thursday and Friday.
Oh yeah, big
what
pop.
What do you see on ARTX right now?
So I'm looking around for some news. I'm not seeing a ton of news on it actually in March at all so far this month. That $3 level could have been something. We've seen a big pop on
through 3.
Exactly, and we've seen a big pop on Friday into the close, and guess what? The stock closed right at $3 on Friday. We gapped a bit higher on Friday, and then off to the races. Stock closed almost 14% higher, and it looks like a similar story here. A lot of momentum, and I am noticing at the 350 level, if you look at the chart on Friday, there was a bit of resistance at 350, and we did open at right at 350, so that was bullish if you're a technician, and we're following through.
In December and January, we saw right around the new year, we saw right around this level 3 times hit. Right in December,
Okay, I'm looking,
right
yeah.
in the early of the year, and right in late January, we saw 3 touches right around that 380, 390 level. So I think that if the Bears make a stand here, it'll be interesting. But yeah, we see key resistance or key support at 250, and I see the key resistance at like 380 going back on the day chart over the last couple months.
Yeah, and 398, 52-week high there. So if we can follow through another 20 or so cents and bring that 398 into play, $4 is going to be a huge level to watch in this one. And once again, we're talking about Aerotech. That's Alpha Romeo Tango X-Ray.
So 52-week high, right at that 398.
That's right.
It's gonna be a huge level because right now there's a ton of space. I mean that's a huge rip from last week up to where I see pre-market at 378 this morning.
Yep.
We're not pre-market anymore. We're in the market.
We are officially open for trade. S&P futures are moving higher here. 1845. 25, 1845, 50. Looks like we're flirting around there. 1846. There's 1846 tick. Remember, folks, that was the massive level that was in play last week, and we are back at the 1846 level. Looking around the news desk. It looks like Jake's ready, itching to go. He wants to talk about some obscure stocks or maybe some not so obscure stocks. So I'm going to pass the mic over to Jake.
And before we get with Jake, I want to bring up BLDP, Ballard Power Systems Incorporated. Let's pull it up on the chart real quick. I know that was also another one that I think Ace was talking about inside the chat room. So BLDP, who's talking about it? Was it Moscow? No, it was Ace. Ace of Stocks. He says he bought BLDP. Ace, what did you see for the BLDP? What were you trading on for that for? And while we're getting that answer, there we go. Finally got it on the charts here. Oh, because she's ripping. That's why. She is ripping up to the hitting 361 here. I mean, we're looking at huge highs over the last year. So let's see if we can find a key level for you here. No, I mean this is 52-week highs. So you saw support at a resistance that broke through at about the 250 level. And it's all uncharted territory the last 52 weeks there for BLDP. Also a high flyer over the morning. up over 30% in the last 6 sessions. So with that, I bring in Snaky Jake. Mr. Jake, how you doing, buddy?
Good morning. Usually I stick to more obscure stocks and kind of trying to find some movers out there, but today I think I'm going to kind of focus more on the macro trade because that's really dominating the markets out there right now. First off, I want to look at the VIX. Opened at a high for the year so far. We are over 16 on the VIX right now. Last time I checked, VIX for anyone following along on their own charts there. Victor India X-ray. So we hit a high right there. We were trading around in the 14s early on this morning, and it really jumped there as traders are showing off some fear. Very interesting with what we've got going on in Ukraine. Obviously, this is something we've been watching very closely. S&P's had that move down midway through the day on Friday. There was 2 hypotheses of why that was going on. One, it was a lot of managers were saying it was simply the end of the month. Traders wanted to take some money off the table. Others had said that it had to do with Russia and Ukraine, but that seemed to be just kind of the excuse to make the move. So we're keeping an eye on more on the macro side. And I know, Kyle, earlier you mentioned that Russian ETF RSX, Romeo Sandy X-ray is a ticker there. So if you guys are looking to kind of get in on this trade, that is one ETF you can move with this. Haven't looked at that in the last few minutes to see what's been going on, but RSX is the ETF. You want to look at that there. So I don't know if we can kind of pull up a chart and kind of take a look at it and maybe zoom out a bit. So maybe having some technical difficulties here, but other things we want to look at in this trade, yeah, there we go. So it's really dipping down. It was down over 8% the last time I checked, so really moving to the downside here, especially with the ruble being pushed down, and then they moved rates from 5.5% in Russia to 7% to counter that, which then can be hitting Russian stocks as well. So that's really contributing to this trade. Obviously, the Russian central bank is feeling the heat from this conflict. Other things we really want to look at, obviously natural gas. Russia is a massive exporter of natural gas, specifically through Ukraine to Europe. So natural gas, UNG is a natural gas ETF. That's primarily United States natural gas. There's not necessarily one ETF that covers the entire world for natural gas, but keep in mind one region's prices trade against another region's. So if you see prices in Russia spiking, or rather in Europe, specifically Eastern Europe, you might see the United States moving to export more natural gas to that area due to higher prices, and then the liquidity will move it out to raise prices here as well. So keep an eye on natural gas. Obviously, crude oil is something you want to watch on this as well. With Russia being another major natural resource exporter. And then gold has been on the move today. I don't know if you guys have looked at gold yet, Kyle.
Oh, yeah. We've looked at gold a bunch.
Yeah, so obviously the gold miners are moving on that. They usually move almost 3x what gold does. So Newmont was really on the rise this morning. That's November. Echo Mike is Newmont, because I know we've had that move to the upside in gold. And when you get gold moving up, that the miners tend to benefit a lot from that. I know for a while back, Cal, you were playing one of those gold miners,
ABX.
right? Yeah, you were playing Barrick, right?
Yeah, I played ABX for a while.
Yeah, so keep an eye on the gold miners. Obviously, if volatility really goes through the roof, you're going to have a lot of traders wanting to take shelter in gold for some of it, and I know that they do like to hedge with the VIX as well. So as this macro trade continues to unfold here, or I guess not necessarily macro trade, more geopolitical trade, we'll call it.
Hey, can we look at corn futures? Cold Select just came in asking for corn.
Yeah, let's take a look.
I got ZC on my charts here. Had a tremendous pullback from a nice spike here at the beginning of the month, trading at like 476.25. It looks like right now. Anything on corn?
I don't know off the top of my head. What I would look here is to see if how much corn is imported by Russia. Keep in mind, a lot of the Western nations right now, specifically the G7, are looking for possible sanctions against Russia. So if they engaged in sanctions against Russia, you would assume Russia would counter with their own sanctions. And if the United States is a major corn exporter to Russia, that I would assume is one of the things that they would hit, because, as you know, we're a major corn exporter as it goes. So that's a thesis off the top of my head.
Corn's also been on a rip over the last couple months.
Yeah, Brent's got a piece on commodities here. Looks like, yeah, Ukraine is known as the breadbasket of Europe. Commodity prices are shooting higher on the back of tensions in Ukraine. Yeah, that's it. So
Ukraine's
looks like
largest export of corn.
Yep.
Colt said in the chat
Yep.
room.
So it's not necessarily my thesis of United States getting impacted by possible Russian sanctions, counter sanctions, but Ukraine itself. So keep an eye on what's going on here. If you guys want to play Ukraine itself, ESR is the Emerging Markets Europe ETF. So this is for primarily Eastern Europe. Obviously, this isn't just Ukraine. I was trying to kind of dive in and see if there's any ETFs that cover just Ukraine, but most of them cover you can have a basket of Eastern European nations. But ESR is something you can kind of take a look at there if you want to try and get in on this trade. And holy cow, is it already 9:45?
Wow, okay, that's a good one. ESR and RSX, two solid ETFs to look at. ESR being the emerging markets European, and RSX being the Russian. A couple of solid plays there. Corn, going back to corn real quick, that's a really interesting play as she's ripped over the last couple of months, leaving a lot of air beneath her. And now with the Ukraine news, it'll be interesting to see how corn reacts here. Obviously, with prices going up, if that demand continues to go down. Because Ukraine is the largest exporter of corn, as Colt's Luck in the chat room has just informed us. And also Morgan just alerted us, SPY just hit over 185. It looks like it just pulled right back down after that, though. Where's she at right now? Yeah, I got 184.72 right now. So came back off of that that little hit right there. So looking at 185, perhaps maybe a little even more important than 1846, as Joel would say if he's listening right now in Vegas. Hopefully Joel put 20 on black for me this weekend. All right, yeah, it is 9:45. Jake, any other tickers we want to talk about before we sign off?
Honestly, I'm really focusing on that macro trade. Obviously, the American autos are also kind of an interest right now, but in the interest of time, I think we want to just sign off for now, and then if something major happens, we can always cover it for tomorrow's show.
Well, good, folks. And I'm talking to Mosca on the private message saying, talking about the Benzinga Pro subscriptions. Anyone in the chat, if you guys do want to get a free Benzinga Pro real-time news and research feed, full calendar suite, and also audio throughout the day, let us alert you on what is moving or what could possibly move off of news and make some money. Come into benzingapro.com and just email Drew at benzingapro.com, and he'll hook you up with a 3-month trial. So Moscow, I'll make sure that I crack some of the whip and get you that subscription there. Also, before we sign off, guys, this show is only made possible because of our good friends over at Options House. They've also given us 150 free trades to any of you that sign up for an account. 150 free trades can also save you a lot of money because, as we know, that's just as good sometimes as making money. So click on the banner up top on this page and get 150 free trades for opening a new account. That's going to be it for our Monday edition of the pre-market prep. I hope everybody has a fantastic day. Make some money in the markets. We'll be watching all the tickers that we talked about today. Tomorrow you'll have Dennis back. Joel's still gone through Wednesday, I think. I'll also be gone, so we'll be bringing on another co-host onto the show. I'm excited to see how they can help you make money. Everyone, have a great day, and we will see you tomorrow.